So,
Let's do it. Welcome. Glad to see everybody. Familiar faces jumping in, and definitely glad to see some new faces coming in. This is the, this is the call where we go over some pretty amazing training that we do on a on some lessons that come from this particular manual that we was just currently talking about. But most important part is that we actually get to learn how to participate and be a part in most important market in the world, the futures market. And I get overly excited when we get to talk about this. So I look forward to talking about my favorite subject anytime we get on. So let's jump in. And if you if you got pen and paper, I would suggest or recommend taking some notes. Take some good notes. So we always start in a particular fashion to make sure we stay in order, and we go over to Barbara Warren to keep us in that particular fashion so that we always do the right thing. So I'm gonna turn it over to you, Barbara.
Yes, sir. Here is our disclaimer for Futures and Commodities One-on-One Trading Group. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, your level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities.
So thank you, Barbara. It's very important that we always make sure we do that, and we try to do it in the beginning so we won't forget. And normally we would go into our quizzes that we will have throughout the week in our group. If you're not in our Telegram group, I would love for you to join. I'd like to invite you in our Telegram group. And the link is already in the chat right here on this call, on this Zoom call. Click on that link and join our Telegram group. But Barbara, I don't think I might be wrong. I don't think we had any quizzes,
No,
did
we
we?
do not have any quizzes.
All right, so we can jump right on into what we have going on and what we have next, Barbara. Let's get going.
The next thing is a video where we talk about our futures and commodities trading group. So it's a good time to share that because we do have some new people on the call, so you can kind of get to see what the group is about, why we do what we do, and why we're here in the marketplace to help you. So I'm going to play this video.
To our family, welcome to the group. And this is a course that we are very passionate about that we would like to see you exceed and excel in. It's a 10-week course where you will learn how to trade commodities that trade in the futures market. This is a course where you will learn whether you experience or have no experience at all. You will learn how to trade, learn how to read the charts, understand how the market works, and most importantly, be on the right path to having a very successful journey in your trading career. So take it serious, treat it like a business because this is truly a business. I want to say, first of all, this is something that I wish I had the tools that we have today, the tools that we have access to. I wish I had when I started trading. Trading was something that I had no idea I was going to do, nothing that I even thought about doing. But when I stumbled upon trading, I knew this was something that I wanted to do. I knew this was it. I had found what I was looking for. I just didn't know what I was looking for, but I knew this was it. And you might hear me say sometimes that this is something that I'm going to take to the grave because it's something that I will always do. But when I got started with trading, I had no idea what I was doing. But in my mind, I thought I had it all figured out. And I want to say starting out by saying the most important thing is to be teachable and make sure that you go back listen to the videos, watch the videos, do your studies, be patient, and most importantly, have a plan when it comes to trading. These are the mistakes that I made in the beginning when I got started trading. And now I can try to tell you the mistakes not to make because I made them so many times, so many times. And I just want to say, when it comes to trading, I don't care how long you've been in the market trading, you're going to always be learning. I'm still learning today. The more I trade, the more I learn. So always be teachable and just understand being patient, having a plan, and treating this like a business is something that will take you to the next level when it comes to trading. Most people start out trading, get into the market, and don't have none of those things. And what happens? They end up giving up, quitting. And that's why we hear these numbers of how most people are not able to be successful when it comes to trading. But the point and the reason that we do what we do in this course is to keep you from doing those things, from going down that path. We want your journey to be successful, and we're glad to have you a part of this family. And our point and our purpose is to show you the right way to start your journey and be successful when it comes to being a trader.
Everyone, I'm just so excited to share my testimony with everyone that's on the call with us and looking at our YouTube video that we're creating for your benefit. So I would like to share my testimony because I think my testimony is very unique. Not very many people have my testimony. I was invited to the group by Barbara, and when she invited me to the group, she said, "Wow, I was invited to a futures and commodities group where you can learn to trade futures and commodities." She says, "I think you would find it really interesting since you really liked Forex and we didn't do really well in Forex when we did it." She says it's a completely different flow and it doesn't cost us anything. And I was like, really? Because we spent a fortune learning to trade Forex and we did not make a fortune trading Forex. And so I said to her, I would love to take the class with you. And so she said to me, okay, in order for me to give you the link to take the class, she says there are videos that you have to watch that because you've missed some of the classes because it's a 10-week class course. And I've missed about 3 or 4 of the classes. So she sent me all of the YouTube videos and I had to qualify in order for her to give me the link to the course. And I thought that was the most, when I didn't think anything of it. But now that I look back, it was the most, I would say, fundamental and the most beautiful thing that she did for me, because she created value for me for this class. Because number one, it was a free class. I didn't have to pay for it. So there was no value there. But she created value for me where I had to qualify in order to get the link, in order to get into the classes by previewing all the previous videos that I had not seen up until the time where the class was at. And I think the class was in its like 4th video at the time, 4th class. And so I had to watch like 3 classes in order to get myself up to date with where everyone was in the class. And I thoroughly enjoyed it. And to the point where I actually got myself a notebook and I wrote down all the notes for the first 3 classes, just in case I was going to be asked a question when I showed up to the 4th class, so that I would be knowledgeable and I would have an understanding of where everyone else is in the class. And I wouldn't feel like I had no clue. And so I thought that was a beautiful way that I started this journey. And I have not regretted one day. I mean, I got so fired up when I first started this class that I watched so many of the old videos and there's so many nuggets. Like every time you take a class, you learn something new that you had not heard before. And it's so beautiful where it just builds. Your foundation just builds in the futures and commodities trading arena, and it's it's phenomenal. Our mentors are very patient with us, and we can ask the same question. I remember I asked the same question over and over, like 3 or 4 times before I got it, and they explained it over and over in different ways until I got it, and I didn't feel any way about it because I just didn't get it. There's certain things I just didn't get, and I felt totally comfortable asking the question over and over, and they were comfortable answering the question over and over in different ways so that I would be able to get it. And it's a phenomenal experience, and I welcome everyone that's joining the group to please take the time and watch the videos in the series that we're in currently. Watch the videos you've missed if you're not coming in on the first class, because it's instrumental in your foundation that you don't have any areas that are missing, because then it makes it harder for you to be able to catch up or to even understand the very foundation of what it is that you're trying to accomplish in the futures and commodities trading arena. So, like I said, I just wanted to share my testimony because I think it's pretty unique, and I am enjoying the journey every single week. I come to classes. I've been doing this about the same amount of time as Barbara, going on 2 years, and we are enjoying it and having the best time of our lives. And it's nothing I've ever experienced before, and I really am enjoying it. And I just wish everyone that's on this looking at this video, I wish you all the good success and all the prosperity that this venture brings to you. And always treat it like a business. Please treat it as a business. Thank you.
Talk to one of the amazing traders that we have and see if she can give some input. And I would like to ask Thor if he has something to say. Thor, do you want to say anything?
If I would, and I would speak of the mentors that we have. We're getting into this with persons who are very interested in what you do. Okay? They are an excellent resource team. Davin and Johnny B, Melba and Barbara. I am so blessed to have them in my life teaching me this trade. And I want to thank you all for helping me on this journey. I'm still learning. I've just started the paper trade, still getting issues, but I have the resource that is wonderful team that we have, right? They have held my hand, they still hold my hand. As they say, listen to the tapes over and over again. You will learn, right? You have access to tools, you have access to listen to the rules. Please make sure and understand the rules. It will help. And again, thank you very much. Wonderful team.
All right, everyone. So this is our group, Futures and Commodities 101. Before we go any further, I just want to give a special thanks to the CME Group for their videos and education from CME Group Incorporated, formerly Chicago Mercantile Exchange Holdings. They're an American financial service company based in Chicago, Illinois. So they operate the financial derivatives, the exchanges, including CME, CBOT, and New York Mercantile Exchange, and the Commodity Exchange, CMOEX. And also a special thank you to barchart.com for their website, the education that they have. Barchart.com is a leading provider of real-time stock and commodities data.
Oh, what's this you got on screen?
So this is our book, Futures and Commodities 101. It is, you're able to purchase it almost anywhere where they sell books. So it's a perfect starting point for anyone that's wanting to learn about futures and commodities, wanting to build a business, and just wanting to do something different from what you're currently doing, or in addition to what you're doing. So this book is really broken down, made simplified for you to help you learn futures and commodities trading. So we want everyone to get the book if you haven't purchased it. Those that already have, we thank you. And once you get it, you read it, please go back to the website and leave us a review. It would help us a lot if you would do that. We would greatly appreciate, all three of us would, and we would appreciate if you would do that.
Absolutely. Bob, I want to hear from you about this slide. What in the world is this thing?
So we also, every year, so Delvin, he's 31 years of trading futures and commodities. So he loves to help people learn what he has, what's taken him 31 years. And so each year we get together and we have a retreat. And so far we've been in the state of Arizona. In between April and May, we have a 4-day retreat where you come and you sit in person live and you learn from industry professionals. You learn more than what you could get on this particular call, and you get secret strategies, and you really learn how to build your business. Every time I have went, my takeaway has been so phenomenal. I have learned something that I had no idea, didn't know about. It's always worth going, and some people do better in person. So if you go to our website, Futures and Commodities 101.com, you can click on the events tab and it will take you to the registration for the event. It's going to be in Gilbert, Arizona this next year, April 30th through May 2nd. We're going to have Mr. Delvin Wright, Mr. Johnny B, Mr. Eric McBride, and we have a special guest that's going to be there. We're not going to tell you who it is, but it's a very special industry professional person. So if you haven't been to one yet, this one you want to be to. If you've been, come back again. We want to see you there. And last year we had people travel from Trinidad and Tobago. We had people come internationally. We had people come from other countries as well, and they're coming back next year. So that lets you know how serious this is and just how important it is for you to, we want you there. And we have a payment plan as well for your registration, ticket registration. There is a payment plan that's available. So we would love to see you in person at the next Travel and Trade Retreat 2026.
Dang, yeah, I'm ready to join this group. Awesome.
Yeah.
All right.
So we have a short video about two important aspects of the futures and commodities market, because when we talk about futures and commodities, we want you to understand the foundation of it, why it exists, why we even have the futures and commodities market, and what does it really mean, what does it involve. So we have a small video to show you about the futures and commodities market, and then we'll get into some more education. So let me pull that up for you guys and play that.
Very good, Miss Barbara.
Yes.
Welcome.
So, how does it all work? Well, before I can tell you that story, I have to tell you this story. Oh boy. Really, we're talking about the simple balance between supply and demand. Okay, think of it this way. The cost of just about everything there is in the world has to do with how much of it there is on one hand, and on the other, how badly people want it. The number of items people want and suppliers are willing to make depends on the price of the item. As the price of a product goes up, suppliers are willing to make more of it. On the other hand, as the price of a product goes down, more people are willing to buy it. The price something is sold for is a balance of the supply and the demand. More demand and less supply, price goes up. Less demand and more supply, price goes down. But watch. I can make this even clearer. There we are. That's better. This is a 1940 Flash Comics, issue number 1. Ooh. It's in such short supply that just one of these in pristine condition is worth over $100,000. But let's say someone, somehow, discovered millions of this particular comic. It wouldn't be nearly as rare, would it? With the supply suddenly so high, the price would plummet. In fact, the price of the comic would drop to about the cost of a Sunday newspaper. So, more demand than supply, prices go up. More supply than demand, prices go down. Congratulations. You're a microeconomist.
All right.
Awesome. I bet you my buddy Johnny B was smiling on that video.
I think he was too. All right. Our foundation, you guys, starts with the rules. And you'll hear Delvin talk about why he came up with these rules throughout the course. All right, over to you, Mr. Johnny.
Excuse me. Give me just a second.
I'd like to say something here about when it comes to these rules. I want everybody to understand that without this foundation, your trading journey is really rocky. It's not solid. And as Barbara was just mentioning, that was my story. My foundation was rocky, and I was having success, but I was failing just as much as I wasn't getting anywhere. And it was basically because I was not following any rules. Just like with anything in life, we have to have rules. And if you're not following the rules, keeping the rules, there's consequences. And I was really suffering the consequences because I wasn't following any rules. And I knew something had to change. But I just wanted to mention this because the rules is what actually changed and turned my trading career around. It was following some rules, implementing some rules, and then following them is what really changed and turned things around for me. All right. Is Johnny gonna talk about number one, Barbara?
Yeah, I'm here, and I'd like to say just one little thing as well.
Okay.
You know, in my early days of trading, you know, you would be up huge one day, and next thing you're borrowing money to, you know, to pay your margin call. And why am I losing my tail when everybody else on TV is getting rich? You know, and it's really because I had no rules. I was following no rules. You know, I was gambling. That's all I was doing. You know, might as well put your quarter in that one-armed bandit and pull it and wish for luck. And we're going to lose more than we win. So I'm so grateful that we now have a set of rules that can guide our trading to give us some risk management. So, you know, I'm going to tell you, the commodity market, you can lose everything you own. if you don't follow the rules. Okay? And we're going to teach all that. So, but the foundation we want to start with is a set of rules, and we've got 20. And so we're going to go over those tonight. So, rule number one is know why you are trading. Why am I entering into this trade? For me, I own a cattle ranch. I may be entering a trade to hedge my cattle crop, or I may be in it to try to take advantage of prices for feed, or I may be speculating. I don't care what your reason is, but know why you are trading. Okay? What are your goals? All right, so that's rule number one.
That's a very important one too, Johnny. And here we are. Now we at number two, rule number two, which is very important as well. Have a system. So might have heard on that welcome video where I mentioned why we have these stats that we have when it comes to trading, because a lot of times people get in the market, want to get in the market, and they have no system that they're going to follow. They just open an account, put some money in it, and okay, what do I do now? If you don't have a system, in my opinion, you should not be in the market. But having a system is very important, but not just having one. You have to believe in the system. Having a system is great, but you have to believe in the system that you have. So that means you need to learn and study it so you can get to a point where you believe in it. And then you have to follow it. You know, having a system, believing in that system, and following that system, trusting that system. All those things come into play, but you definitely got to have one. I just feel if you don't, you shouldn't be in the market. All right.
Right. So every trade that you want to do, you want to have a plan. All right. And that plan needs to be written down. Matter of fact, when you call our broker, I, he wants, or you should have that that whole trade already lined out on paper, right? And then you want to follow that plan. Now, sometimes the market is going to go against you. That's okay. We're going to follow the plan. Sometimes you hit a big winner. It's okay. You're going to follow your plan. You will hear that over and over again throughout this course. All right. We're going to teach you a plan. So, main thing is that rule, we want to follow it. Now, a lot of y'all are on my class or on my call that I do every day at 2 o'clock. How many times have y'all heard me say we're going to ride this pony as long as it lets us, right? But we're going to follow a plan, okay? And that's where this comes from, all right? Next.
Yes. What y'all know, this right here is one I want to put emphasis on. You may have heard it again in that video that we made a long time ago. But this right here will never get old. It's it's to me, I feel that this is not optional. But everybody does have a choice, to treat it as a hobby if they choose to. If this is something you want to just have as a hobby, you have that right to do that. But if you're gonna be serious about it and you wanna, you know, have a successful trading journey, you want to treat this like a business, because that's exactly what it is. It's a business, and if you treat it that way, you can grow and pretty much build that business from nothing. Learn how to trade. If the business gonna be smooth and doing well all the time, absolutely not. It's gonna be going through its ups and downs just like any business. But the thing about this business, we can actually learn this business and participate in it before we actually put real money in it. Remember that. You're going to hear more about that later on. But we can practice and learn and do this business before we put any of our real money into the business. But if you want to be successful at trading, treat this like this is a business that you are building and growing. And this right here will take care of you the rest of your life. It will change your life. But if you don't treat it like a business, I'm telling you right now, it's gonna be a challenge that that you're gonna face when it comes to trading. And I should say it another way, it's gonna be a challenge either way. But if you don't treat this like a business, you're gonna probably have more challenges than not. All right. So this is a big one.
Rule number 5. Know when to take your profits. Um, we see this all the time. I'm going to hit a home run with this. Um, we see this in the crypto world. Bitcoin goes up, 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 and then it goes down, 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 down. All the profit I made got wiped out, and now may even be a loss. All right, but and we're gonna teach this, and we're gonna teach you a plan on how to know when to take a profit, and how to take a profit. But we want y'all to be successful. The markets go up and the markets go down. There's going to be another rule that we're going to go about here later, but I want you to remember, know when to take profits. All right, let's go to the next one.
All right, rule number 6. And it's probably one that Johnny should have been covering, but be willing
I'll take
to
it.
cut
I'll
it
take
off.
it.
Go
I'll
ahead,
take
Johnny.
it.
Go ahead. Go ahead.
This is one of my favorite.
Mm-hmm.
So when I said know when to take profit, conversely, be willing to cut your losses short. All right? Live to trade another day. It's okay to take a loss. All right? Because we want to be able to preserve our assets so we can trade again, which is going to bring us to another rule. Go ahead, next rule. Mr. Sugar. Oh, sir.
I can tell you from experience about this one. Don't do it. It's easy to get caught up, and Jamal talked about this before the call started. If you was on, listen to Jamal. He was just talking about this one, but this is one that's easy to get caught up in. We want every trade we get in to be a home run. I get it. We want to have that big trade. We want to make, 5, 6 figures on a trade. Here's the thing about it. I remember my mentor told me one day, profit is profit. And it makes so much sense because we think, well, it's going to go up more or it's going to go down more. We're thinking we got to get more out of the trade, but we have to be willing to take what the market gives us and understand that it's not always going to be a thrill sticker trade. It's not always going to be a home run trade. And a lot of times going for the home run, we end up striking out, Johnny. We end up getting nothing out of the trade while we trying to get the home run. So please understand that it's not going to always be that big home run trade every time we get in the market and get into a trade. Sometimes you're going to walk on base. Sometimes you're going to hit a single or a double. It's not always going to be a home run, but the goal is to still make it back to home plate. Whether it's a home run or you get walked on or you hit a double and then somebody bring you home. The point is, don't get caught up in thinking every trade is going to be the big one. All right.
Ah, this is kind of where I wanted to go earlier. Know your position in the market. All right. The market goes up and the market goes down. You know what's the beauty part of the futures trading? We can make money going either way. So we want to know our position in the market. There are three positions: long or bullish, short, which is bearish, or the third position is out of the market. All right. This is a rule or this is something in commodities or in trading that is so foreign to so many people, and we're going to teach it to you. How can I sell something I don't own? Okay. Now, if you go short the market or you sell the market, you're bearish. You're wanting the market to go down. So this is a rule that we're going to cover extensively. When to be long, when to be short, and when to be out of the market, period. All right. Next.
Number 9, it gets approved. Trade different markets. How many times have we heard of a word being called diversified? Here's the thing I want you to understand when it comes to this rule. We have so many opportunities to take advantage of in the commodities market. And once you start looking at all the different groups, all the different commodities that trade in the futures market, you may or may not, but you may find some particular ones that you favor more than others that you may want to trade. But if you only trade one market or look at one commodity, you may not realize there's some other markets that you can take advantage of. And sometimes these markets may not even be, trading in the fashion that you want to see them trade in. So looking at other markets and taking advantage of other markets also gives you more options that you can take advantage of. Perfect example, I'm a grain trader. I love the grains. Everyone knows that about me, but sometimes there's no opportunities in the grains. Grains is a seasonal market. And when it's the grain season, the markets are moving and more active. And they tend to slow down a little bit when it's not the grain season. But doesn't mean that I have to just wait till the grain season comes back around again. I can look at other markets. I might want to go and look at livestock and look at the metals or the energies. But the most important thing is to know that we can trade different markets. But if you decide, well, you know what, I just want to trade this one particular commodity, you can do that too. I'm not saying that you can't do that. It's just Then you know the options are there, and be willing to take a look. All right.
Trade both directions in the market. That's rule number 10. Um, you just want the price to move no matter the direction. Now, this is what we talked about earlier. Volatility is what we're going for. All right. Bitcoin goes up, we trade it up. Bitcoin hits its ceiling, it goes down. We trade it down. Um, the cattle market, the corn, you're going to see that in the charts. You're going to see that what they say, history doesn't repeat itself, but it rhymes, and you're going to see it over and over and over again. So we want to be able to trade the market in both directions.
Yes, yes, yes.
Okay.
Exciting. Rule number 11. I would take this, but actually, guys, I really like to go to Barbara on this one and let Barbara speak on this one, if she don't mind. Barbara, you want to take 11?
Sure, it's stay humble. The reason why you want to stay humble because there's only one expert, and that's the market itself. If you're not humble, the market will humble you. It will make you be humble. Because the minute you think you know it all, you're going to get in the market and you're going to do whatever you got to do, it will put you out of the market and it won't take long. So I would advise everybody stay humble. We live to trade another day. Just long as we have commodities, they're necessities. The good thing about it, no matter what's going on in the government, people gonna drink coffee, they're gonna need gas in their vehicle. They're necessities. They tend to not go away. In other words, if you don't get in the market tomorrow, you can wait and get in another day. It's best to be humble. And I've learned that the hard way. That's why I can say that.
Yes, yes, yes. Thank you, Barbara.
Go
Tell
ahead.
you.
No, go ahead.
Okay. Rule number 12 is use the charts. I want y'all to understand when it comes to trading, to me, charts are everything. It's the whole meat and potatoes of trading when it comes to when I'm trading. And I know people are sometimes kind of nervous or intimidated about charts. If you never read a chart before and you looked at a chart, you don't understand it. It don't make any sense. You don't see what it is people are talking about. I get it. We was that way too. Don't think that we always knew how to read a chart, because there was a time where me and Johnny could look at a chart and it didn't make sense to us too. Well, we're gonna teach you how to read the chart. If you don't know how to read the chart, don't get overwhelmed. Don't get anxious about that. We're gonna teach you how to read a chart. That's one thing you're gonna know taking this course and doing these trainings. You're gonna learn how to read charts, because that's part of the foundation and how we trade. The system that we trade is all about using and understanding the charts. So you got to use the charts, especially when it comes to being a technical trader, meaning that you trade by the charts. So you have to use them, and then you need to understand how to read and see what the charts are telling you, because they tell a story. Charts tell a story, and we're going to show you and teach you how to understand and learn the story that the charts are saying. All right?
Be patient. Oh, I love this one. Um, Primarily because as soon as I fund my account, I want to make a trade. I got money. I want to spend it. You know, come on. I'm ready to get into a trade. Uh, but this is where Rule 12 is so important. I need to make sure that the charts tell me that it's time, and not, forgive me. Oh, but XRP, the banks are all going to use XRP, and you need to get into XRP, or Bitcoin is, it's going to $1 million, or corn, or, well, yes, it may be, but this may not be the time to get in yet. Be patient. Let the market come to you, and let the charts tell you when it's time. Okay?
Yes, John. Yes.
Sorry.
Ah, guys, sometimes this rule gets overlooked when we talk about it because some people say, well, you know what, I don't understand how it's so emotional. What do you mean? Let me tell you, this is such a big rule. You're gonna hear it over and over and over again throughout these calls, these trainings that we're gonna be doing, because I want y'all to know trading is so emotional. It's so emotional. Boy, we get in the market, we get in the trade, and our order gets filled, and the market start going in our favor, or the market start going against us, and we get so emotional. Guess what? All these rules go right out the window. We don't. We forget every rule we went over once we get in the market and start trading, because our emotions kick in and take over, especially when the market's going against us. That's why we want to have a plan and have a system so we can trust it and stick to the plan, because our emotions are going to kick in. Trust me, I don't care how long you've been trading. It's always a challenge with controlling your emotions, because the market will test you. It will test you. Like Barbara said, it will make you sit down somewhere. So controlling your emotions is going to be something we're going to keep hearing, only because we're trying to stress and emphasize that it's important to control your emotions, because when you don't, you make irrational decisions, and we don't want to make irrational decisions. We want to be in control of our emotions. And when you get in the market, it's a roller coaster. It's emotional. But this is a very big rule, very key rule that we need to make sure we work on. And I can tell you, over time, over the years, I got a lot better at it. But when I first started trading, I was real bad at controlling my emotion. And people say all the time, damn, you just laid back, calm, cool, collective. But they don't know 20 years ago, I was nothing like that. Trading really helped me with stuff like that, because working on my emotion, controlling my emotion. So just know we're going to talk about this a lot throughout these calls. All right.
All right, we do have a video to watch on how we are affected by prices. So let me pull that up.
All right.
Hi, I'm Darnell Head with Discovery Education. Have you ever heard the saying, you only get one chance to make a first impression? You might think, how much can I know about someone or something based on just one encounter? Well, it turns out that in the case of behavioral economics, first impressions have a big impact on our future decisions. And humans will usually trust first impressions more than anything else. It's a principle called anchoring. The idea is that if we're given a small piece of information before we need to make a decision, that information can play a really big role in our final choice. And random information can act as an anchor that affects our decision making. Let's say you go to a store and see a shirt that you like, but it has a price tag of $150. You pass on it because it's too expensive. You head to another store and see a similar shirt, only this time the price is $50. Would you buy it? A rational person, sometimes called an econ, might think, wow, I just found a really great deal on a shirt that I like, I'll buy it. But a human, someone who may be influenced by their first impression, might look at the lower price and assume that the shirt is of cheaper quality or have something wrong with it and be apprehensive about buying it. The only thing influencing the decision is the fact that they saw a similar shirt somewhere else at a much higher price, and that first price is anchoring their impression of what the shirt should be worth. Businesses often use anchoring to their advantage to make humans think they're getting a great deal after all. Let's say you see that shirt again, only this time the price tag says the suggested retail price is $150, but also says it's discounted to $50. The first impression can be so strong, the human may not even care that the shirt isn't something they want or even need. First impressions can be important, but it is also important to consider all the information you have before making a decision. Don't let your choices be anchored down by the first thing you hear or see.
All right, guys. People every day in the marketplace lose because they can't control their emotions. Then there's other people in the marketplace that win daily because they control their emotions. So it's all up to you and how well you can control your emotion to determine how far you'll go in the marketplace. All right.
My turn again?
Yes.
All right. Follow the trend. The trend is your friend. You guys that are on my call at 2:00, we talk about cryptocurrency a lot, but every time we hear something about, oh, this coin's going up or this coin's going to do whatever, and oftentimes you'll see me pull up the chart, and if you can see on the chart that it's constantly going down, the trend is down. I don't care what the other person says. Until that trend changes, I'm not going to bet against it. All right? Or if something's going up, up, I'm going to choose a place where I can get in and follow the trend until the chart tells me that it's going to change. But if you want to be a thrill seeker, if you want to be a gambler, play against the trend and suffer the consequences. Okay?
So what you're saying, Johnny, is you always want to be on the right side of the trend, right?
Absolutely.
Yes. Very, very important. All right. Oh man. I think it's only right that this one fell on me, Johnny, because I had no clue what this word was a long time ago.
Yep.
Shouldn't have been trading without knowing nothing about this. But boy, trust me, guys, we went over a lot of rules tonight, and a lot of the rules that we went over have something to do with this word right here, risk management. A lot of those rules are coming right back to this word right here. And a lot of what we're going to go over throughout these calls and trainings are all going to come back to these rules. But the main thing the rules are going to be focused on is risk management. And we're going to learn what risk management is, what it's all about, and how to use and have proper risk management. That's one thing you're going to learn in this course. Risk management and how to have proper risk management. And before you know, for the record, if you were to go out in Google land, Google world, trying to find out what is the number one reason most people lose money when it comes to trading. This is it right here. Not having proper risk management. That's why we focus on it and touch on it so much because it's that big. Having proper risk management is something you're gonna learn. So if you don't know what that means, what it is, don't panic. Don't get out of shape. We're gonna cover that so many times. Get into depth about risk management because it's a huge part of trading. Huge part of trading. I jumped in the markets, had no clue about risk management, and lost a lot of money that I probably or maybe could have, you know, traded or kept some of that money if had I known about this word right here. So just know a lot of what we're gonna go over, everything's gonna be kind of going back to this right here, risk management. That's how big it is. All right.
Limit the number of trades. You know, y'all hear me talking about this on my call as well. You want to trade other markets, but you don't want to have so many trades going on that you're risking too much or you're not paying attention to what you're doing. All of these rules are going to go around the risk management aspect. So, you know, we want to limit the number of trades that we're participating in. All right.
Love it, John. Only fitting that I cover this one too, Johnny. So, guys, limiting your risk when it comes to trading is so important because trading is risky. You know, there's no secret about that. Trading can be risky. We have an opportunity to kind of, put some type of control in where we can kind of limit the risk, where we can bring the risk down, change the level of risk when it comes to our trading, and we want to teach and practice and we want to follow that. We want to learn how to limit our risk. That's important to know that I can limit my risk when it comes to trading.
I'm, so, I'm sorry, D, I didn't mean that. And what was rule number 17? Because I'm writing them down over.
Rule number 17 was
Limit the
limit the
number of
number.
trades.
Hmm. Yeah. And guys, let me say it this way. I know this all too well from experience. I won't even get into a story that some of you know and some of you may not have heard about, but I, I know this one all too well. And I know about getting in the market and trading as risky as you can trade. I've done it. So if you want to have a career where you just constantly blowing up your account, and in the trading world, when you hear someone speak about blowing up your account, it's not what you may think. Blowing up your account don't not mean that it's growing and blowing up in that way. Blowing up your account means that you're starting all over again because you don't lost all the money in your account, and now you have to fund it all over again. Can't tell you how many times I did that. But when you learn this rule right here, it helps you to not, you know, go into a habit of blowing up your account. So this rule is so important. Limit your risk. You don't want to be out in the market trading as risky as you can trade. You might as well go to Vegas if that's what you want to do. Um, and we want to teach you how to trade, not gamble. All right.
Now, when we were talking about limiting our risk on a trade, on a specific trade, we always, always, always want to use a stop loss. All right? That is how we limit our risk. We never, ever, ever enter a trade that you don't have a stop loss on. All right? Especially in the commodity market or the futures market. All right?
Now you tell me, Johnny.
Yeah. In the early days, didn't even know what a stop loss was. You know? Now, because I know number 20 is the golden rule, isn't it, Barbara? All right. So when we talk about limiting our risk, we use a stop loss. And what does that stop loss do? Take us to 20. Go ahead. Go
Talk
ahead,
about
Bill.
it, Johnny. We'll both talk on this one. You go ahead.
Never, ever, ever risk more than 10% of your portfolio on one trade. So the stop loss that we use in Rule 19 always represents 10% or less of our portfolio. We don't want to risk more than 10%. Why? Because if we lose, we can live to trade another day. Okay? This is our golden rule. I don't care what investment you're doing. I don't care what we're doing. We never risk more than 10% of our portfolio on one trade. All right, Delvin, go ahead.
So, Johnny, are you saying if I got $1,000 in my account and I want to risk no more than 10%, I shouldn't have no more than what risk on this trade?
$100.
And see, the thing is, we get into a trade, we got $1,000 in our account. We want to risk the whole $1,000.
Don't
At
do
least,
it.
at least that's what the old Delvin used to do. Don't do it, guys. I'm telling you right now. That's that thrill seeker mentality that we talked about earlier when we started in the beginning with the rules. Don't do it. Because what Johnny just mentioned to you, you want to understand this is proper risk management right here. This is using proper risk management right here. This golden rule is one of the risk management things we're going to teach you. This allows you, not like Johnny said to trade another day, but this allows you to understand that you set, this is how much I'm going to risk on this trade. That's your plan. You stick to the plan. You use the system and you trust and follow the system. And you understand that sometimes the market's not going to go in your favor and sometimes it does. A minute ago, you heard Johnny talk about stop loss. If you don't know what that is, we're going to teach you. We're going to talk about what a stop loss is and what all does a stop loss do. But all this stuff is going back to risk management that we're talking about. But this golden rule right here is so important that we need to understand if you get in a trade and you risk 100% of your account and you lose the 100% of your account, you just lost the whole account. But if you get into the market and you risk 10% on the trade and you lose on that trade, how many trade opportunities do we have, Johnny?
That'd be at least 10. Well, it's more than that, but because the next
Yeah,
trade is only 10% of what you
right.
got left.
And see the difference of risking 100% of your account on a trade versus 10%. So that's the difference in what we're talking about. These rules that we are following and going over, God, this is how we lay our foundation. start our foundation so we can start off the right way when it comes to trading. When we build a house, we have to have a solid foundation first, right? And it's the same thing with our business. We want a solid foundation with our trading business so we can start it off the right way. That's why we cover and start out with these rules, because this is where we start so that we can have all this already in place as we start to learn how to read charts, start to learn the system. All these things gonna come back to why we have these rules that we went over tonight. So, anything you want to add, Barbara?
No, sir. Y'all pretty much covered everything.
Okay.
I got one other thing I'd like to say.
Go ahead, John.
Folks, what we're going to teach you here is going to be applicable to all the different markets: Forex, crypto trading, stock trading, everything. So understand that this is a broad brush. I wish I would have had this training before I started trading.
Yeah, me too.
I'd have been a lot further down the road. So, with that being said, Delvin, Q&A.